Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel where we do mostly the top-down analysis of different financial securities, and today I'm going to be looking at the forex currency per euro AUD. So that's the euro paired against the Australian dollar. And without wasting much time, let's get to it. As you all know, I do my analysis using pure price action trading strategy, where we work our way from the higher time frame slowly down to the lower time frame with the hope of getting tradable opportunities. So I'm currently on the monthly time frame, and as it's customary, what I try to achieve on the monthly time frame is to get my directional bias as well as my key zones. And these key zones have been neatly mapped out by way of this horizontal bars that you're seeing on my chart. I have a video dedicated to to how to do this on my channel, just in case you do not know how to map out this zone. So the next thing would be for us to go further to look for our directional bias. So merely looking at the chart, it's very easy to see that from the general overview on the monthly time frame, we can see that this market has been trending upwards. So what do I mean? So we can see the market making higher highs and higher lows, higher high. And if I'm to go by this, you can see that the market is at a very strong resistance zone and price is being pushed downward. So my immediate take would be that price is at a major resistance zone and it's being pushed downward. So if I'm to zoom in, I would say, okay, maybe price is being pushed downwards. And if we look at the candles that are here currently at this resistance zone, we can see that for the past 1, 2, 3, 4, 5 months, price has been stuck here, trying to break above this resistance zone. And with this long rejection that we're seeing, it means that price is not likely not to go break it anytime soon. So if I'm to take this out, that'll be my first take on the direction of the market. So if I'm also to concentrate on the most recent trend on those monthly time frame, I can take this and do this. So this would be my trend, my most immediate trend line. So it's like a first touch of the trend line, second touch. So I'll be hoping for what third touch of this trend line. And to make this a bit more interesting, I can even add my Fibonacci retracement too. So as to me an idea of where I think price should be retracing to. So if I do this, then I'll be expecting that price will be retracing to this level, just between the just beneath the Fibonacci retracement golden zone. So the zone between the 0.5 and 0.618, it's where I believe price would be retracing to. So now this might look like a very short distance, but let's not forget that this is a monthly time frame. Each candlestick here takes a whole month to form. So this is my idea of what the direction of the market should be like. Price coming back into this Fibonacci retracement golden zone and making a third touch of the trend line before pulling upwards to maybe probably try to take out this resistance zone again. Now, this is what a perfect scenario would look like. But even if this were to play out, remember, one candlestick here takes a whole month to form. So we might end up waiting a whole year to see this happen. So what do we do next? The next thing to do would be to go to the next lower time frame, which is the weekly time frame, to see what the market would be showing us further. Normally on the weekly time frame, I try to get a structure of the market. That would be I haven't gotten my directional bias. For now, my directional bias is saying that the market wants to come downwards. Why? Because the market is being rejected at a very strong resistance zone. However, on the weekly time frame, if I'm to go to the line graph to see if I can see a chart pattern, I can see an M pattern here. Now, the simple rule for trading M pattern would be that wait for price to break the neckline, come back here, and then pull downwards. Why? Because the M pattern is actually a strong bearish reversal chart pattern. So price might even break above this neckline, come all the way here, and then come downwards. So this weekly time frame chart pattern that I'm saying here still supports my initial take that the price is at a strong resistance zone and would likely do a retracement down here before continuing upwards. However, if we go back to the candlestick chart, there's something that is of importance for us to note here, and that's the fact that there's a there's a meaning support zone here, which had made this particular currency pair to be in a range for a while now. Now, how do I mean? Each candlestick on the weekly time frame takes a whole week to form. So for the past 1, 2, 3, 4 weeks, price most recently had gotten to this level and has been pushed backwards. So it only makes sense to see that price has been oscillating between this support zone that I just drew here and this major resistance zone from the monthly time frame. So that means if anything is going to be happening in this with this particular currency pair, then it is most likely to happen within this range instead of us hoping that it's going to break, come down here, and then start going upward. So now we have a range on the weekly time frame. If this range breaks, if price is able to break beneath this range, the support level, then we know that price is going to come directly into this Fibonacci retracement golden zone, make a third touch of this trend line, and then the market would likely move in the upward or continue in its upward direction. But however, our major point of interest would now be this meaning range that we've seen here. And then to make my chart a bit clearer, I can take this out. I can as well leave this here. So now having this, I can now go to the daily time frame. Now on the daily time frame, we can see that the range becomes much more clearer. We can see price moving from support down to pushed downwards a bit, but came down to the pushed down a bit, went back to the resistance zone, came back to support, did like a dilly dally here, went back to the resistance zone. So price is currently at the support zone. Now, there's a possibility that price breaks above the zone and then comes down, just as we've said before. But there's also the possibility that price will be pushed upwards. So all we need to do would be to look at what do we think would likely happen. So if I take this out, we'll have to observe the candlesticks closely. So let me take this out because we are dealing with this area. Now, if we observe the candlesticks closely, we can see that there's already a strong rejection from the zone on the daily time frame. So which would mean that this is a suggestion that price is still likely to be pushed upwards and for this range to continue, because even though the sellers pushed price down aggressively, you can see that on this daily time frame there's already a big rejection, which is like an indication that price is likely to go back upwards to test this resistance zone. So like I always ask, since we have a ranging market before us, how do we take advantage of it? There's a simple rule that we buy from support and we sell from resistance. So because of this rejection here, does that mean I should just jump in to the market and start buying? The answer is no. So the next thing would be to go to one of our entry time frame, which is the H4 time frame. And what do we do here? To take advantage of this market, first thing would be to place a counter trend line here. So this counter trend line will help to guide us on whether to buy or sell. The next thing would be to also observe the nature of the candlesticks that we have that we have resting on this support zone. Now, what's the nature of the candlestick? First, we have a strong pin bar showing that the presence of buyers are very, very much on this in this support area, but we still cannot jump into the market. Now, one of my strongest entry model would be to wait for buyers to conveniently push above this trend line. Once there's a retest, then we can start buying towards the resistance zone again. However, um, we can still go further to the much lower time frame to see if we can get what a change in character. And from what I can see on the H1 time frame, if I go to the line graph, you can see that buyers are trying to do the most to push price upwards. However, the safest way still to conveniently buy or enter a buy trade in this setup would be to wait for this trend line, 4-hour trend line to be taken out. Once there's a retest, then we can buy. But for those of us that trade in a much, much lower time frame, we can still go for that to the M30. So we have something like a double bottom here already. So you can just put like a cap here. And once this is taken out, once this neckline of the double bottom is taken out and there's a retest, then you can buy towards this trend line. So this will be like your first target. So once the trend line is broken and there's a retest, then you can add more positions. Personally, I would want to take the safe option. Patience is usually key when it comes to trading profitably. So I like to take the safe option and wait for price to break above this level before engaging in this market. So this is my simple take on the Euro AUD. So if you're the type that you trade forex and you do not trade only the major currency pairs, you like to test other pairs as well, then you can look at this particular analysis closely. And if you're into trading of this, you can compare it with your own analysis and drop your take in the comment section. Don't forget to also like and share this video with others. And if you're coming across this channel for the first time and you feel that this style of analysis makes sense, do well to subscribe so you'll be the first to know when subsequent video drops. Thank you for stopping by my channel. Thank you for always supporting and do enjoy the rest of your day. Cheers.